Thank you. It is. It's important for everyone to unplug, however they do so. And kind of hard for me, but this was great. I laid on a chair over the ocean, basically, and read and have tried to keep up with the ever-changing pace at which things seem to be moving, so we can jump right in. And then I have, I write them down when I find something that it sticks out to me. So some of it will not really be in any particular order, but I try and look at stuff with the BRICS, with the dollar, with interest rates, with everything that follows this narrative, and then some. And I found some really interesting things to chat about. So why don't we jump right in? We had talked before about the Shanghai Gold Exchange and the progress that they've made in both Saudi Arabia and in Hong Kong in this new vaulting structure. We went back to the beginning of May and we talked about the Saudis had opened up an account at the Shanghai Gold Exchange. And in fact, it had been officially launched. And what it was realizing was a two-way free exchange between renminbi and gold. And at the same time, it's facilitating Middle East investors to directly participate in the Shanghai Gold. On June 26th, the Shanghai Gold Exchange opened its international board, a designated warehouse in Hong Kong, and it launched these contracts. We talked about that. What I did just realize is that on the first day, many Chinese and foreign institutions successfully reached transaction. And so this is now in motion. We are seeing countries trading their renminbi, their yuan, Shanghai Gold Exchange, which is China's official platform for gold trading, by the way. And they're doing it directly without needing, the key to it is that they're doing it directly without needing intermediaries or converting through other currencies like the US dollar. So for investors, this provides opportunities and more efficient access to the gold market. And for Saudi Arabia and China, it puts them closer together. It slices apart in yuan or renminbi and then immediately converted into gold. These are the little pieces, the little by little, the chess pieces that are being put into place that are very, very difficult once fully in place to disrupt. And there'll be more about this in a moment when I get into the BRICS pay. But suffice it to say, this is a big deal. It is now operational. Gold is being delivered in the warehouse in Hong Kong. Being built right now is in Saudi Arabia. Saudi Arabia is already set up in Hong Kong. And through the Treasury in Saudi Arabia, other Middle Eastern nations will be able to participate. I was watching Andrew Maguire the other day. I love Andrew Maguire. I don't know if you've had him on your show, but he's one of my favorites. And through his sources, whoever they are, he said that the Chinese insurance companies in June, insurance companies can invest into gold from 1% to 2%. That's 25% of global mine supply if that's the case. And he's saying that a possible increase to 10% in 2026, you're talking all of global mine supply, just from a 10% toe in the water by Chinese insurance companies. Yeah, well, and they have the state-sponsored accumulation programs for Chinese housewives. I mean, they're pushing their populace into owning gold. You can see this is a bigger deal than just the state owning it. They see a benefit in their public, in their constituents across all of China to own gold. And in all of the provinces, it's not just in Shanghai, it's a big deal. An interview that I watched last night blew my mind. And it supports a lot of what I've been saying. It's with the BRICS Pay CEO. His name is Andrei Mikhailyshin. I'm butchering that for sure, but he's the BRICS Pay CEO, chairman and founder, Andrei Mikhailyshin. Anyways, sorry, Andrei, for butchering your name. I'm sure I did, but some things that he talked about BRICS Pay. Now, first of all, one of the questions that was asked of him, and we fortunately got this right, was what's the difference between BRICS Pay and BRICS Bridge? And it is a technology that is fully backed, as we know, by China, Hong Kong, Thailand, UAE, and Saudi Arabia. They're the 5 main participants in the BRICS Bridge technology, formerly Ambridge. And it is, as he said, a cross-border CBDC platform for central banks from Saudi Arabia to China or whatnot. And now, one of the big things that we talked about last time I was on your show was the BRICS Bridge platform into non-BRICS countries. I mentioned the Belt Road specifically, 150 plus countries, 75% of human population, north of 50% of global GDP. They were going to use BRICS Bridge for these central banks to trade with one another. Think of the new Shanghai Gold program. So they will trade with one another across the bridge, free from SWIFT interference, in local currencies, and then settle imbalances in gold. We were spot on that. Is a technology that is B2B, business to business. It is consumer to business, business to consumer. It is bank to bank. It is one notch below the BRICS Bridge program. It is also free from SWIFT interference. They talked about having aspirations of at some point of being integrated with things like Visa and MasterCard, but they're not because of the sanctions that are put on Russia and Iran. And he did say that in the future, he sees BRICS Pay and BRICS Bridge being combined so that you have the central bank portion, you have the B2B portion, all under one kind of big package of breaking free from the West. He said currently their representatives are in China to develop BRIC Pay technology throughout the Belt Road. How do you like that? So the Belt Road is being already integrated. We know this through the BRICS Bridge as China industrializes them, as they pull the natural resources out of the ground, as they build the infrastructure to industrialize these third world countries in Africa and Asia and South America. They will do so free from SWIFT interference over the BRICS Bridge and settle imbalances in gold through the Shanghai Gold Exchange and all the other exchanges like the one in Singapore and Moscow. But now they have their representatives negotiating in China right now to use BRICS Pay amongst the Belt Road. This is massive, right? So you get all of these business to business, bank to bank, like the commercial banks, regional banks, not the big central banks. That's the bridge. BRICS Pay would be bank to bank, business to business, business to consumer, etc., integrated through the Belt Road. That is a massive, massive, massive development. And I think it's something that should not, because I bet you no one has heard this before, but I want you all to think about this in terms of stablecoin and in terms of the digital world we are moving into. He said, and I quote, well, I don't quote, I'm paraphrasing, but pretty close to a quote. He says, they asked him, the gal asked him, she said, there's a lot of terrorism out there and bad people, and how you're not going to be financing terrorism or bad people. This is open, guess what he said, to non-BRICS countries as well. BRICS Pay. Not compatible in the West yet, just like BRICS Bridge, but it's open to non-BRICS members. So you're talking expansion, massive expansion. This is what the BRICS naysayers never caught on to. They didn't catch on to it yet with the BRICS Bridge. We did, and we said by Lavrov opening it up to the non-BRICS countries, you have just ignited a fuse under the dollar. You're talking the majority of human population when you throw in the Belt Road, the Shanghai Cooperation Organization, the Eurasian Economic Union, the BRICS, and all of the other countries, like the countries in Southeast Asia, the Eurasian countries or the Asian countries rather, that have just signed up to BRICS Bridge. They in and of themselves, with the 5 Middle Eastern countries that did represent 38% of global GDP. Now you open all of this up to non-BRICS countries, bang. Well, now they're opening BRICS. Something really blew my mind, and I've never heard this before. Now, granted, the reason I left my corporate office in Minnesota is because it's the only state in America, and again, they're now re-implementing it, licensing and bonding. And so we're very attuned to anti-money laundering laws and know your client legislation. He said to other countries, we are keenly aware of compliance issues in all of these countries. And he said, our software is compliant with AML, anti-money laundering laws, and KYC. Now, you know that, right? You know what KYT is and figured it out. Well, I listened to what he said. I rewinded it again. He said, our software is compliant with KYC, AML, and KYT. Now, before I tell you what KYT is, I want you all to think about this in terms of digital surveillance world. We've been warning you about that. A lot of people say that these stablecoins are kind of like a CBDC in sheep's clothing, kind of like it still gives the central authorities the ability to monitor, to track the on-ramp and the off-ramp, to do all these things. Well, guess what KYT stands for? Know your transactions. So their software is compliant with know your customer, anti-money laundering, and know your transactions. So guess what? Ultimately is going to be part of this software. You go and buy a couple AR-15s for your home protection. May not be a good idea. You go buy bullets, you go buy alcohol, you go buy cigarette, whatever it is that you're going to buy. Guess what? It's going to be known. And that's part of this whole new digital ecosystem. And I think it's kind of scary if you ask me, but I'd never heard that before, as you and I are pretty well in tune to this kind of stuff. I don't know. I don't know if you have any thoughts on that, but I thought it was kind of precious metals, gold, silver, platinum, to talk about a few things that I saw. And you stop me at any point, we can talk about anything that we've talked about so far. Okay, so, I've been thinking a lot about the gold to silver ratio. And you got Goldman Sachs and JP Morgan forecasting $4,000 gold by next year. I think that's pretty reasonable, actually, on many levels. But assuming that plays out and the gold to silver ratio were to get to 50 to 1, where it's averaged about 45 to 1 for the last 150 years. At 50 to 1, which is very conservative, at a $4,000 gold ratio, that puts silver at $80 an ounce. I mean, you're talking a double, easy double. And so when I think about where silver could ultimately go, there are so many things that are screaming silver and its value right now. You know, UBS just raised its target to $42 an ounce. That's about an 11% increase. But when you look at all of the things that have been happening, to me, whether it be the increase in the lease rate, the lack of shares available to short or to buy to cover shorts on SLV, the massive delay from T+1 settlement in London to T+8 weeks in London, the huge deliveries. When you look at the distortions that we find in the silver market, when you look at a simple returning to 50 to 1, where it was just a couple of years ago, that puts silver at basically $60 an ounce. That's a solid, 50% gain almost. So you're talking about, I think, the value of a generation. And it seems that things are changing, the way that the market is moving. We're not seeing these massive sell-offs. We're seeing consolidation, choppiness, volatility. But the strength is something that is very different than what we've witnessed before. I'm very, very, very hopeful for what the rest of the year brings for the price of silver. I find it interesting that the LBMA came out the other day and warned of counterfeited metal, which they said distorts prices by creating artificial supply. And you think about that for a second and think this is the institution that's creating billions in unallocated bullion contracts, 38 to 42 through September 2025. They're talking just in a month through June 2026. So they're basically saying we're right there. By the way, for the people who we're recording this on Monday, the options expired today. So I expect today to be volatile, just like Friday was and Thursday, but I expect it to shoot right back up tomorrow. We'll see if I'm right. You have to wonder, is it a conspiracy or is it reality when you talk about when Chris Powell says there are no free markets, just manipulations? The traders suck in the speculators, and then right at the end, they smash the price so that the options expire worthless. The big banks get to keep the premium on that, and then it goes right back up. They rinse, wash, and repeat. But this is a game that's much more difficult to do so. And it kind of reeks like we're getting to the end of this game. We've heard that before, but the level of the spread in the exchange for physical jumping up 250% last week, the no shares available to borrow of SLV, none, when there's usually millions. The 7 or 8% lease rate, highest I've ever seen. The T+8 weeks, the delivery. Things are changing, and it's as dumb as a mud wall to continue this game. I think they know that. I also want to talk about percept. You know, I wrote down homes are getting cheaper in gold. Now, homes aren't getting cheaper, but they are in gold. And, you know, people talk about this real estate deal where homes are so unaffordable. They're not unaffordable in gold if you've been holding gold, because measured in dollars are getting crushed. Measured in gold, you're winning. Since 2005, it's fallen off a chart. It's gone straight down. The amount of gold that you need to buy a home, it's at almost all-time lows or very darn close to it. So in other words, gold is keeping pace. The dollar is not. This is the point that needs to be understood, is that gold is not here to make you wealthy. It is wealth that keeps pace with inflation. And that's really the bottom line.